Great. Santosh, my next question is about index investing. Of course, we did mention that, but the gentleman, Mr. Vikram Prabhu, wants to know, factor-based investing or index investing over an active fund in mid-cap category specifically. Any recommendation do you have in this sector?
See, I don't recommend, but today what's happening is there are plenty of index funds available in the themes. So today, actually, if you look at it, the gentleman whoever asked this question, so we are actually spoiled for choice. Earlier, there were only diversified funds. Then we started begin to get lucky when we started getting thematic funds because we felt happy being in a thematic fund. Then you started getting index funds. Now in thematic schemes, you get index funds. And within that, you also have mid cap fund, large cap fund, and small cap fund. For example, if you don't like Nifty, today there are funds like Next Nifty 50. Now, if you don't like Nifty, but you like equal weights in the Nifty, I think your fund DSP itself has got an equal Nifty 50 fund. You see that within the index, within the theme, and within the team, you have a subs category which makes it even easy, basically spoon feeding the investor to choose what he wants. So I think if you know what you want, just go for it. You don't need to ask a question about whether I should go for it or not because it's easily available over there. And I think, to be fair, every fund house is putting out a product which an investor feels he can self-serve himself. I think the availability of the products today is saying that I cannot expect the investor to be either fully informed or not informed. There is a bunch of investors who know what they want and they specifically just want that.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.